Hi, our dear followers. How are you doing today? I hope you're doing well. Welcome to the new Markets Titan weekly analysis. And as you can see, that we have decided to switch from written report to the video report. So simply because it's more interesting, right? So let's start by reviewing what had happened last week. Last week we had nothing important but the Bank of England governor speech. That was it was all about just one topic, the LIBOR, and even the website of the BOE labeled this speech as the death of LIBOR. So LIBOR, for those who are not aware, what is it? It stands for London Interbank Offered Rate. It means the interest rate for banks inside London. So any deal between a bank and another bank inside London, this is called the LIBOR. And the governor said that this LIBOR is non-effective anymore. It's not measuring the real standards of the market, and it has to be replaced. And he named something called risk-free rates. Okay, so he said that the economists recommending something new called risk-free rate, but there was no further details about it. All right, the market did not react so much to this speech. So okay, now before delivering more in the next week's strategy, I have to mention that the MFI indicator is an indicator invented by us, okay, invented by Markets Titan. It's a fundamental indicator, and what it does is that it's telling you which pair to trade, okay, which pair is stable and clear enough to trade. It doesn't tell you where to enter the trade, when, or where to place your take profit or stop losses. It just gives you an indication to the best pair to trade. Because as you know, for instance, you may enter a euro-dollar trade and you find that the stochastic is oversold, so you think that it's going to go up and you buy. However, sometimes you find that the price still going down, or the indicator giving you a bullish signs. However, the price keeping going down. So the MFI what's doing simply that it's telling you, okay, on the long run, for instance, the cable is going to be is a good pair to trade. Okay, the pound dollar is a good pair to trade. So you can simply use the regular indicators like MACD, ADX, stochastic, volume, whatever. All right. So for this week, the MFI gave us an indication for the pound, Kiwi, and the Kiwi Swiss pairs. Okay, so those pairs are healthy. All right. So let's get more details. Here, the British Pound index. We can say that we can see that it's forming a bearish wedge, and it's getting ready to hike at any time. All right. Now, this is the monthly chart. Okay, this is the monthly chart. Also, here we can see that the lows it was getting lower and lower, and there was a higher low. Okay, have a good look at this candle. All right, let's break it down to see what is it. Here's the weekly chart. This candle is forming a bullish engulfing pattern. Okay. So, and here is the confirmation. So now the price, the British pound is getting ready to bull. Okay, it's a sign for the end of the bear trend, and it start it's going to start to go up. Okay, here's the Kiwi index, the New Zealandish dollar index. Okay, it's forming a bearish wedge. However, we can see here that the price is at the top of the top side of the wedge, and it's getting ready now to retrace. All right, so it's at the top here, and it's going to retrace. No way. Why it's going to retrace? Not to break. All right, let's look at the weekly chart here. We can see that we had this pair has experienced dark cloud. The dark cloud has achieved its target and now is going to retrace. The stochastic indicator here also giving you the same indication. It was here oversold, then it went up to the overbought, and now it's getting ready to be bear. Here's the pair together. We can see that the pound is the price for the pound Kiwi. The price was at the bottom here, at the bottom of the rising trend, and it's getting ready to bullish. So this is going to be my first trade for the next week. All right. Okay. Another index here is the Swiss franc index. We can see that it's very flat. Okay, it's very flat since 2012. Here's the chart for the Kiwi dollar and Swiss franc. You can notice easily that the price here was forming down pins. After these pins, it go bullish. This is a monthly chart. Okay, so here, not so far, we had the bottom of the pair here by forming this pin, and the price is getting ready to go up. However, if you had a deeper look here, you'll find after this pin 1 2 3 4 candles, then the price had a little bit retrace around 50%, then it went up again. Here also after this pin 1 2 3 4, also 4 candles, then the price retraced for 50%, then it went up. Right, so we should expect the next candle, and this is the monthly chart I'm talking here. Okay, so if you are a medium period trader, you should know that the price is going to retrace a little bit, then it's going to skyrocket after that. If you would like to learn how to trade in such cases, okay, in the retracement case of the correction case, there are 2 links in the description for the tricky tricks of the candlesticks book. It has a very clear strategy for short-term trading. Okay, so it has a strategy for the intraday trading and the correction tradings. All right. I'd like to add that the book has a very clear and well explained strategy. It's not like the average book. All right. Okay, the future plans. Here we have the next week, every week we are going to have the weekly analysis. In addition to that, we are going to start some kind of educational courses, and it's not going to be so surface. It's not going to be so shallow, talking about the pair, what is the pair, what is the forex, what is it. It's going to give you much more details about the market. Like, for instance, the first video is going to, the topic is going to be about the difference between spot contract, futures contract, and forward contract. I bet that 95% of traders have no idea about the difference between the 3 contracts. I'm going to explain the difference between all of them and give you an example and tell you about the way how to get benefit from trading all the three contracts and how to trade the three contracts. All right. And finally, also we have the a very hot topic now is the gold and silver ratio. Gold silver ratio is 100x. So the silver ounce now is trades for $17, and however the gold is 1700 or 1800. So it's more than 100 times spread, and it's unprecedented. It's the first time that the two metals have this big ratio. It means a very important thing. I'm going to elaborate it in the upcoming videos. And thank you very much for watching us, and wait for the next weekly announcement. Thank you very much for following us.